What's up, Resource Nation? I'm here with my friend and my brother, Ken Perry. And for the very first time, he gets to do his very own masterclass because Ken's been on the show, I don't know, umpteenth times, but he's never had his very own masterclass series. So here we go. Welcome to the show again, buddy.
I am so excited. I finally get my masterclass. It's been a long time coming. So,
well, you're a man of many talents, which is why we haven't done a masterclass yet. But today we tap into your superpower, which is what makes this a masterclass, which is really just being an educator. You're, like, in my opinion, one of the best educators, influencer speakers in the space. And your superpower is knowing guidelines, actually reading them, knowing rules, regulations. You know, guys like me, high Ds, they tend to skim and look at like the bullet points. So I'm guilty of that. You actually print stuff out and read it all the way back to Dodd-Frank and everything else before that. So we're going to pick your brain about the CARES Act. And I know you got a story that you were just talking about, so I want to hear that story because it's very relevant to consumers and realtors and lenders watching. So guys, listen up because Ken's actually read the CARES Act. He's going to tell us why it matters, maybe what we don't know about it, because there has been some misinformation out there, and I will have the back of the originators that have pushed some of it out because FHFA wasn't super clear on sharing information quickly, and so there was this time frame of not really knowing what was happening with forbearance, what the outcomes were, what the options were. And so I don't really blame the originators for going out and pushing content. I'm actually thankful that they did. Some of it may not have been accurate, but again, nobody was very forthcoming originally with any of the information, so I'll have their back, and I won't put them down for pushing anything out. So, Ken, you spent a lot of time reading the CARES Act. Tell us why it matters to consumers and maybe what we don't know about it that's different from maybe the last 30 days that we've been pushing information out on.
Yeah, so a couple of preface things. First of all, I've been reading laws since 2003, and I love it. And when I dove into the CARES Act, like every time I pick up a law, I remember, why I first fell in love with reading these laws. It's like I could just cuddle up next to one with a glass of wine, and I just love it. Like, because there's so much in there that you don't hear. Like, if you're just getting fed what somebody wants you to hear or what somebody, wants to spin your opinion on.
That's called media.
Information. Yeah.
That's just media.
And it's a lot of it is incorrect. And you don't know that till you start reading the law and you go, wait, nobody's talked about this. This is really strange. Or you hear people say, well, that's illegal. It's like, really, why? And where would I find that? And how do I back that up? And I'm working on that now and trying to figure out, I know laws and I know rules. Now I'm trying to look at, a lot of these orders. What is an order versus a law and rule? So this is what my mind,
It's probably the coolest superpower out there. I mean, if you're honest, like being in love with rules and regulations and guidelines. So
much fun.
Kind of a cool dude.
Yeah. Oh, thanks. Nobody else called that cool. That's really awesome. And I needed to read it for my wife because my wife is a mental health therapist. And so I was reading it because a lot in there allows for telehealth. And my wife can now actually operate 100% over web meeting and phone meeting as a therapist, so this has changed our experience in that my wife wouldn't have been able to work had they not passed the CARES Act and insurance companies not go for it. So it is, the more you read, the more you understand what your rights and responsibilities are. And so, yeah, that's first.
Well, let's start with your live, because you went live on your own page. And what was your biggest takeaway for us that maybe didn't watch it? That was maybe a misnomer for what we originally thought was true, and now you've kind of like uncovered like, hey, this is actually what it says.
Yeah, and to reference a story you asked about, so I have a buddy that is moving out of the state and moving to another state and wants to buy a house in that other state. And originally he was just curious to find out what this forbearance thing was all about and just getting information, because gathering information is typically a good thing, right? If you can dig in and go, I want to know the details on this thing, it's usually good. So he dove in, went onto his website for his bank, and his bank website, logged in, pressed the button that says learn about forbearance, which forbearance is a big part of the CARES Act. Not a big part. It's actually not even a portion. It's a very small portion of the CARES Act, but it's significant part. So he jumps on there and he's like, what is this all about? And he clicks on it and he looks at it and he's like, nah, it doesn't, I don't need it. And part of the CARES Act requires you to say that you are having a hardship but it forbids the banks from asking you to prove it or document it.
Yep.
And so that's specifically line by line in the CARES Act. So he went in and just said, what would I find if what information is out there for me? So goes to now be pre-qualified to buy a house in the move, deciding to move to a different state, goes and gets pre-qualified, and the bank says, oh, you've got a forbearance.
So all he did was click the button to learn more, right?
Yeah. And he's like, I do not have a forbearance. They're like, yeah, you click the button.
Yep.
So that stupid button, and I checked mine. I bank with a bank in the, my mortgage is with a bank in the U.S. I won't say which one, but it's definitely a U.S. bank. And I logged into their website and I clicked on my mortgage because I was like, I want to know what.
I'm glad you clicked on your mortgage and not somebody else's mortgage.
Yeah, I was logged in as you, so I had to log out first.
Oh, gotcha.
And then, logged back in as me, and I clicked, and it said, forbearance, we're not going to ask you. And it said, we've got a lot of ways for you to pay it back. And what I was looking for is like terms, because people call me all the time or message me on Facebook or comment on videos, and they're like, do I have to pay it all back in one lump sum? And I'm like, great question. And so I went in to find out, like, what are the terms of this? And I didn't go as far as click here to start. It was a pretty clear button that said, click here to start the process and look at your payback options. And I was like, I want to see what my payback options are, but I know better than that, right? I kind of want to take advantage of these killer rates, and I'm going to want to refi soon. And so I didn't press the button. But it's amazing that pressing one button could cause a problem.
Yep.
In the CARES Act, they're not allowed to count you as late or report you as late on your credit report. And that was confusing to people because they're like, oh, sweet, my credit will be clean. And so they can't count you as late, but it can show up coded differently. And what we've seen, and you've seen it, we've seen credit reports now that say in government forbearance program, or they reference the forbearance. Now, it's not affecting your score. But what we've seen is Fannie Mae, and I don't know if they've passed it yet, this is kind of on the hush, but they're looking at the 12-month seasoning. So if you pressed that button, you wouldn't be able to get a loan, Fannie Freddie, for the next 12 months.
Yeah, and unfortunately, unwittingly attested to wanting forbearance and not really knowing that, because I call it the Apple effect. Whenever they get an update, we scroll to the bottom and hit yes.
Oh, yeah.
Not knowing what we attest to. So that happened. And there's a lot of people.
Though, Ryan, if you check your website, there are none. Is none, I think is the right. When I went on there, that's what I was looking for. Like, I love reading. I'm the only dude that reads that Apple thing.
Right.
So I'm like, what am I giving up? What are my rights I'm giving up? Right. I went to the bank website for my mortgage, and there's nothing that says by clicking here you will have a forbearance listed on your credit report. Nothing like that shows up. Nor is it required to. But yeah, I agree with you. Like, people skip through, but normally there's language that you have to skip through. This one was just like, hey, click here. We can make this super easy.
The one thing you mentioned that isn't super clear, and again, should be super clear, and I'm not trying to play, what's the saying, like, Monday morning quarterback, we're going to learn a lot from all of this, including the virus and the treatment. And it's easy to throw stones and say, I would have done a better job. I'm not trying to do that. Right. This one is very easy, though. This is not even hindsight. It is, if you're going to change the terms on your loan, we should have had a disclosure. I don't even care if it's a one-pager saying, here's the 3 options on how you can pay it back, or maybe it goes to the end of the loan. Maybe you true it up after the 3rd month, the 4th month. Like, that should have been clear. And then also, back to the point that you kind of stopped on, just so you know, you're going to be in timeout mode for 12 months.
Right.
That should be clear. And I think that would have vetted out and pushed out, 75% of people that didn't really know what they were getting into. A simple disclosure, which is crazy. Everything else in our world is disclosed, 17 different ways. Why would we not have one little pop-up just saying, you're sure you want this? Here's the ramifications. Here's your options to, get back on track. And oh, by the way, you can't sell or refinance for 12 months. I'm frustrated for everybody with that.
I did a Facebook Live on Sunday, and I talked about grace and love. And so I'm working through grace and love right now and trying to give people grace during this time, and trying to avoid a lot of the stuff that's just yelling and frustration. I've seen so many videos lately that are just like, it's just a bunch of anger being thrown around, which is why I love, of course, you guys are always super logical and make sense, instead of just like, you're not trying to create something that makes people angry, right? So if I look at this through grace and love, you've got a Congress that needed to bail out a lot of homeowners and give them an opportunity to stay in their houses, right? So in trying to save it, they passed this thing, which normally they would have had a lot of time to pass. But the entire nation is looking at them and going, can you help a brother out, right? And they're like, sure. And they just like wrap it in duct tape and get it through, trying to get the Republicans and Democrats to agree on this thing and get it punched through. So they get it through and they're like, we'll figure this out kind of later. But here you go, right? So the industry gets it. Think of the mortgage industry right now, right? Here's the craziest part. We just laid off all of the people in loss mit. So loss mitigation, there was nobody in loss mit in 03, 04, 05, right? 06. Right. The market crashes. Now a mortgage company's biggest department is the department that deals with modifications and short sales, right? Now you have to staff that thing up like crazy. Well, then the market comes back. Everybody's booming. Things are awesome. How many people do you think they have in loss mit right now? Right? Nobody. And then the government passed this thing. They're like, by the way, you have to figure out a way to implement a forbearance program. And there you go. Yeah. And so these banks are like, oh, dang, like we don't have any leaders in that space. We don't have staff in that space. And keep in mind that some things that had passed earlier, part of Dodd-Frank, requires the single point of contact for every one of these people. So that means that if you go press your forbearance button, you get one person or one team at that company that now has to reach out to you. Now you have a process, right? That process isn't implementable with the staffing that was already existing. Yeah. So yeah, they should have a disclaimer, but they're like, just throw it up there, like almost like Equifax did. Remember when Equifax had the big breach and they threw a website up like, here you go. And it was done pretty horribly. And it got spoofed and it led to more hacking, but it's part of lack of planning of what would happen if this were to occur. Right. It's disaster planning, right? And I used to talk to people out there, disaster recovery plan, and they're like, yeah, I mean, what, if a hurricane shows up, we're inland. And well, nobody knew this type of thing would happen. So just we're piecing it together. And then you have the communication coming out of social. And the worst thing I've heard in all of this is the realtor who said, close a loan now, buy a house now, don't make your payments for a year.
Yes, please don't push that out.
Oh my gosh.
Please don't you're hurting everybody.
First of all, I teach fraud. I teach how to not do it.
I teach fraud.
I know it's weird to say it. Uh-huh. So I look at, you have to actually say there that I am in need and I have been impacted by this virus. How many people are buying houses and doing that with money in the bank? Yeah. They don't need it, and they're now committing fraud, and it's federal, that's mortgage fraud, right? So think about the impact of those people in dealing with a potential sentencing later if that is to be found that they did it illegally.
So several good points before we move on, because I just thought of one, because you're saying, and it's a fair statement, like, hey, they were trying to help. It all happened quickly. They passed something quickly, and sure, there was errors, and you're having some grace and love around that. Totally fair statement. Yeah. But I do know, and we talked about this off air with is it PPE loans or what? PPP, triple P or whatever it's called, PPP loans. Yeah. Same thing. Right. Well-intended. Let's get out. Let's help America. We've seen people take advantage of that, and I've already seen the government go, hey, yes, we rolled that out quickly, guys, but we also have the right to audit. And we're seeing people get audited that maybe didn't need that loan or maybe didn't, use it as it was intended. Right. And they're going to take that money back. It is a loan. I read that guideline. Yeah. I didn't bullet point. I read that one when it first came out, and it said you may qualify basically not to pay this back. Like it's a grant type thing. Yeah. May is the operative word. So with forbearance, guys, they still can come back and have the opportunity to audit situations, to Ken's point that maybe you try to take advantage of the situation. I don't think, it's a get out of jail free card. To have more grace and love, and I'm going to throw a gigantic curveball that's going to tempt us to go down this conspiracy theory thing in a second, which is kind of funny to me that I'm even doing this. Remember when this all happened, the feds were trying to help and lower interest rates, right? Because we need, like, oh my goodness, this thing's going crazy. And how do we help spur on the economy? Let's lower interest rates. Fed started buying mortgage-backed securities, right?
Right.
To Ken's point again, well-intended. It was rolled out quickly. Well, what happened? Well, it drove rates down so quickly that it caused gigantic margin calls and almost pushed big lenders out of business overnight. Gigantic margin calls. It was not the intended purpose of the relief. They were trying to drive rates down to afford cheaper money for everybody, but it was an unintended consequence. It's another example of, hey, this wasn't a conspiracy theory. This was just simply the government reacting quickly to try to help. Here's the curveball. So we just talked about 3 or 4 examples of government responding quickly. They didn't get it perfect, having grace and love.
Right.
A lot of the theories that are out there for the virus, this is the curveball and the potential chance to go way off. I won't even call them conspiracy theories. Some of them may be right. We don't know yet. So I'll be fair and say some of those, there's a world that exists that all the things that I've watched that have been taken off YouTube could be true.
Right.
There's also this other world that exists that Ken and I just talked about, that the government was just trying to respond quickly in a pandemic time frame, and they just didn't get it right. Both, I'm not taking either side, because that's where it gets real crazy. I'm not going to talk about any theories, but I'm just saying keep that in mind and try to keep a level head. It doesn't mean that there was a hidden agenda. It doesn't mean that there's this grand plan. It just means that they could merely go, look, man, we thought we were going to have millions of people dying, so we did this, this, and this. And sure, there's unintended consequences. I'm not saying either's true. I'm not smart enough to know the truth. I'm just saying I know that both are possible.
Oh, that was so funny. I thought you were going to throw me a much harder curveball. You put so many words into that. I'm not even sure what you said. You know what
I mean, though? I'm just saying both worlds are possible.
Yeah, it's funny. I'm watching stuff get taken down. This thing just came out called Plandemic. I don't know if you saw it, but
yes.
All these people put it on Facebook.
That's exactly what I'm saying.
I'm taking
that could be true. I'm just saying it also could be true that
video, they took it off, and I was like, that's weird. I just had this conversation today where I was like, imagine being Facebook and trying to decide what gets to stay and what has to go, and think about the masses getting all of our information from one place and how easy that is to manipulate that information. There's a lot of responsibility right now on Facebook. There's a really cool, cool and spooky podcast I listen to. It's Radiolab has a podcast that they talked about what gets allowed on Facebook and what doesn't. And there are buildings full of people that are not labeled. The building's not labeled. It's in the Philippines. There's a few others. And they basically are the editors of content on Facebook, and they delete off all the stuff that isn't appropriate. So the algorithms pull these things off and hand these to these people. And the average work expectancy there is very short because of all the things that they see. But they definitely are doing their edits. And I posted right in the beginning of all of this, I posted a link from Aaron Ginn, who now is like, it's very clear which side he's on, but his data was so spot on that I'm like, I'm going to post that. And then by the time people read it, it was gone. And my post was like, hey, let's try to shoot holes in this because it looks pretty accurate. And I always look at the source of information, right? So I took his information, went to the source. I can't prove it wrong. But Facebook decided against it, and Medium dropped it even. So it's hard because that's why I love reading laws, because you can hear a lot of stuff about things and believe it. Did you know in the CARES Act, there's a piece that says if you have any trade line on your credit report and you negotiate that trade line to either not pay it, miss a payment, or anything with your creditor, they cannot mark it on your credit as a late payment. And that's for 180 days from the last day we are in an emergency situation in the United States.
Yeah.
And that's not even mortgages. That's like everything.
Yeah, and we're seeing that on the street. So what that looks like is we'll pull a credit report, and you took forbearance not on your house, but maybe on a car loan.
Yeah.
And so you're not late, to Ken's point, but just so you guys know, it'll show in there forbearance, and we're actually seeing natural disaster too coded in there.
Yeah. Yep.
And so if you're an underwriter, what do? You ask questions.
Right.
And I won't speak for the industry because every lender is different, and how they handle that situation is going to be different. What we've seen being reasonable with underwriting and just having reason win out is, hey, are you late? No. Okay, that's good. We're still going to qualify you with the payment even though you're in a short-term forbearance thing. And I think that's reasonable as well. And so I won't say that every underwriter or every company's handling it that way, but I think that's a reasonable way to handle a situation if you go into forbearance on a car loan or something else.
That's the most flexible way I've heard of.
Yeah. Well,
I'm hearing people just going, hey, why would we give you a loan and expect you to pay your loan back if you can't pay your other debts back right now?
That's a fair question too.
There's nothing saying you can't hold it against somebody.
Yeah, that's a fair question.
You can't count them as late, which makes you really excited. And then you look at a credit report, and if I'm a lender lending to somebody, I go, what's the likelihood they're going to pay me back, right? That's what we lend on. We're trying to figure out, are you going to pay me? Is Ryan Hills going to make his mortgage payment? And I'm like, Ryan, how do you do your mortgage payments? Like, do you make those mortgage payments? And you're like, well, right now, I have not, because I have an opportunity to not make the payment. Well, why would I lend money to you if that's the case? And that's where you've seen the creeping up of all the credit score requirements. I didn't know 719 was subprime, but apparently 719 credit score is now subprime. Yes. And it's because if I get somebody, if I want to lend to somebody, I got to make sure that they are of such a high credit level that I'm not worried about them making their payment no matter what. Well, and people backing off their payments is just.
I just had this conversation with the CEO, and this is so funny because this is how our conversations are on a daily basis. They go here, and here, and here.
Oh, yeah.
So welcome to the life of Ken and Ryan. But to your point of 720 and the likelihood to make your payments, I kind of debated this and said, well, usually we go to credit to determine that, like your credit worthiness. Right. Problem is that is indication of your past, typically the last 5 to 10 years. And if I'm a 780, it shows that I've been a good steward of my money and I've paid my debts in the last 10 years. What it doesn't show me is, let's say I'm a 780 and I work at a theater right now. That's not a good indication of what my plans are going to be moving forward or my ability. If I can't work because theaters are shut down, merely looking at credit doesn't tell you the whole story. So I had the debate with the CEO saying, I'm not saying I have the answers, but I know that one is an indication of the past and not necessarily reflective of the future. So what is the mechanism that we can put in place to really measure if they have a job right now? Because I tell you what, and I do the same thing, like, would I lend my money? I think you've said that 10 years ago, and I still do that test today. If I have a doctor, that's a 620, not just because he's a doctor, but I know he's got a good job, he's probably working overtime. I'm lending him my money right now. I don't care that it's a 620.
What kind of doctor? No, I disagree.
You wouldn't lend your money?
To a doctor?
Yeah.
Do you realize how many doctors are facing layoff right now because they can't do
True.
their job?
True. So if they're elective, if they're laid off, that's my whole point, is finding a mechanism to see if they have a job or not.
But it becomes so subjective on an underwriter making the decision on whether or not somebody's livelihood is going to keep going. Because you're right, and I know why you're saying it. My response is more like, do we trust that anybody's going to continue? But you're letting an underwriter go, okay, based on that doctor, let's say they're a doctor that does, I have dentist friends that are stressed out right now. So let's say it's a dentist, or let's say it's a doctor that's working in a clinic, and you're in a state that says you cannot do work in a clinic right now. My daughter needs a test. She needs an EKG. She can't get one because it's all locked up, right? So do we want an underwriter looking at it and going, well, I don't know, that person's doing elective surgeries, therefore I don't think they're going to make their payment. And I don't know how long they're going to make they're going to miss their payments. If this was something where it's like, for the next 2 months, we're all going to stay inside, and at the end of 2 months, we're all going to go outside and open up life again, I think you have a much easier underwriting. I think because there's so much mystery around a lot of this, I don't know, and we are putting it in an underwriter's hands to say, well, your job is going to go away. Like, I get movie theaters totally, but what if I'm at a restaurant that didn't get the PPP?
I know the other side of my debate too is you might get yourself in trouble when you get into subjective underwriting of maybe treating somebody better than another person, and now you're slippery slope of fair lending, and
don't get me started on fair
things
lending.
like that. So I understand both sides, but I'm just, and again, that's why I said I don't know the answer. I just know to ask more questions and know that just going off credit score, and you know what, the industry spoke, because you're right, most of them have gone to 680. Some are still down at the lower 600s, but most of them have gone to 680. So that that ship's kind of sailed. Right. If you aggregate the rest of the industry.
Right.
I just know that it's not the end all be all in the credit score. I think there's more to consider in times like this.
Hey, let's consider one other thing. Can you discriminate based on a sickness? Can you ask for details of a sickness?
Not that I know of. I don't think you can.
Which means that you can't discriminate based on somebody having
COVID.
You can't ask them if they have COVID-19. So think about fair housing.
Yeah.
And somebody's trying to apply for an apartment right now and is coughing in the interview. You can't not rent to them because there's a risk there. Think about discrimination based on job because you're off your job while you're dealing with COVID. Think about an underwriter going, well, based on the percentages I've seen, I don't mean to get dark on this one, but underwriters can't do that. And so I wonder if there's maybe some discrimination based on disability that's happening here that we should probably keep an eye on. Because if I'm out of work because I'm currently sick, and if I've been diagnosed and let's say I'm in the hospital with COVID, but I can still sign a loan, would the underwriter require me to get better first? Because I think there you would see some discrimination as well.
They would probably just try to keep it factual, which is what you've been saying all along, like try to keep speculation out factual and do like a verification of employment.
Right.
Shows that they're not, their hours are reduced, not employed, ask questions, and then get to the slippery slope of do they have COVID or not? But they'd probably leave it to employment facts at that point is my guess.
Yeah, it's just stuff we never thought we'd have to think about, right? These are the impacts and lack of information and misinformation. I think anybody in the mortgage industry right now that's sharing information needs to make sure that they're not just that they're not on one side or the other, where they're either sharing, hey, by the way, you can get a forbearance, have a great day, or do not take a forbearance ever, because I don't think you should unless you need it, right? So my messaging that I've been sending out is I'm trying to say, look, if you own a restaurant and you're dying right now financially, that's who it's for.
Right.
So if you need one, consider it. If you don't, then don't. Like, I'm trying to be as clear as possible because I've seen people on both sides and saying, just stop paying your mortgage. Keep in mind, there are laws. I'm thinking of the Mortgage Assistance Relief Services rule that says you cannot tell somebody to stop making their mortgage payment. So I would consider, are there people in the industry that are telling people that? Because now they're breaking another law by advising people to do that.
Yeah. Sorry, my phone's going off somewhere.
Oh no! You asked me about sunscreen. I mean, that's a big deal.
No, I know there's sunscreen in there, but I'm like, we always try to make sure the shows are applicable to realtors and consumers and lenders. But I find it funny that how many pages in the CARES Act?
I think it's 4 pages on the Sunscreen Innovation Act. So it did modify that to change on testing of sunscreen. There's also a lot of over-the-counter drugs in there. There's, there's a lot in there. What I'm looking at and people keep asking me about is how much of this stuff do you think is the new normal forever? And here's a crazy thing. My wife, as a therapist, she can't talk to, she's in Washington State. I'm literally a 14-minute drive from Oregon. And my wife cannot have a teletherapy session with somebody in Oregon without a license in Oregon. And so this CARES Act made that possible. Now she can. So when we go back, I wonder if they'll look at maybe some potential ways for people to do that in the future. Because it doesn't make sense that the same person talking to the same person, she has Oregonian clients that drive to Washington. She can see them because they're in Washington. So then I said to her on our walk the other day, I'm like, imagine being a loan officer. Like if you're in Oregon and you're a loan officer, let's say you're in Florida and you're a loan officer and you do a loan for an Oregonian, because they're an Oregonian, that loan requires a license in Oregon, even though they're buying a single family owner occupied property in Florida.
Yeah.
So I wonder if people start looking at licensing laws differently and going, do we need to be? Washington State is so hardcore on loan officers working out of offices. You have to have a licensed office. So is Idaho.
Yep.
So do we look at that and go, I wonder if the state looks at it and goes, hey, this seems to be working. My guess is they don't. My guess is that they go back to normal after all this is done. But it will be interesting to see how many changes there are.
Yeah, because I think the industry is going to evolve, and some of it's going to be good evolutions, good things. I do think that in general we're going to be better from this. We're going to find efficiencies. We've already found several. I mean, many companies are breaking records, and everybody's working from home. So how do they treat brick and mortar moving forward? Do they lax on people working from home in ops and sales? And And that's going to be real interesting to see the evolution of it, because that'll also lead to, I mean, remember the last couple of years, it's been cost to originate, so high, so high.
Right.
And a lot of that goes into that.
Yeah.
I'll let you have the final word, bringing it back, because this is our conversations to forbearance and CARES Act. If you had to educate both consumers, realtors, and lenders, I'll give you two questions. For the realtors and lenders putting out content, how would you coach them right now with all the things we just talked about? And then what do consumers need to know as well? And I'll give you the closing word on both those.
For realtors and lenders, I would say, if you haven't read the CARES Act, don't talk about it. Like, just keep it out of your mouth. Go read. It's a small section. It's not that much to read, but people keep saying, well, this is the law. And it's like, no, it's not. Like, go read the law so that you can say this is the law, right? It's not that hard. Reading laws is not that tough, right? Go read the law and then deliver information in a way that is safe and also sensitive to people out there. I've seen a lot of really hardcore stuff, and I'm like, gosh, like, we could have said that a little bit different. So just be careful in messaging right now. To consumers, I would say if you can make your payments, make your payment. That's always going to be the best. We're going to get through this. There's going to be an end point to this. There are days I wake up and I don't feel that way, but today I'm feeling like there's going to be an end to it. And for everybody, I think I'm going to take this in a totally different direction on the final thought.
Yeah.
My big messaging I'm doing right now is get a therapist. I'm calling today to get a therapist. I'm going through anxiety that I've never experienced. And I talked to my wife and she's like, nobody's calling therapists right now. Like, they have people that can see you, and people are thinking, well, it's not going to last long, so I'm just going to muscle through it. And if you have health insurance, which I think everybody does, most of that covers telehealth, and just pick up the phone and get somebody on the phone and talk through it with them. Because that's my biggest concern right now. It's not physical health, it's mental health.
Yeah.
And that's what I'm pushing pretty hard on, is just get help. Even if you don't think you need it, use your resources. And because I don't think people understand what this is doing to extroverts. And,
I love that you mentioned that, man. I've been talking about it with my team, and it's underrated, and this stuff affects you, mentally, and being at home and not seeing your loved ones and not going to work, not having a routine. It weighs on you. And man, when my state extended again for the whatever time, I'm not a guy that gets negative, but I went negative real quick, and I was just like, man, this is killing me. And we've got to lean on each other. And I love, you talking about your own experience, because if we're both dealing with that with ourselves and our teams, I'm pretty sure everybody out there that is locked up in their home for an extended period of time is having the same challenge. And so I love what you said about that, because it's for some reason we don't talk about it openly. I don't know why. I don't know if there's a taboo around it, but it shouldn't be at all.
I think it's the biggest win we can get out of this whole thing is understanding mental health. It's my biggest win so far. I never understood anxiety. Yeah. I was the guy that was like, what are you doing? Like, why are you so stressed out? The details and the facts don't lead to that stress.
Right.
And my wife was always like, I wish you understood anxiety. Well, now I do. So
right.
Not fully, but I get it when you're like, the facts don't make me feel this way. It's just the way I feel. And that's what people need to be, that's what I'm getting out of it. And I love it. I've already dealt with it with friends where they've called me and I'm like, what you're feeling doesn't make you weird, and it doesn't make you crazy. It makes you a human. And I never would have reacted that way. I'd just try to pick them up. Like, you're going to be fine. Hang in there. Do some push-ups.
Think about positive things. Yeah, do some push-ups.
So it's way better now to understand each other, and I hope that's what we take away from this.
Well, guys, if you have questions for Ken, put them in the comment section. I'm sure he'll be nice enough to answer. Maybe we can even ask you what the pages are, the specific pages in the CARES Act that we should go read, because I love your point about that. Like, hey, maybe don't claim to be an expert about a thing you haven't read. It seems so simple. So maybe we can get those pages so you go right. People like me, like, I need to skip all of the sunscreen stuff and I need to go right to the applicable pages. So maybe we can get that from you and put that in the comment section below. So, hey, thanks, man. I appreciate it. Stay positive. I hope to see you soon. I can't wait to shoot our next Knowledge Coop CE theatrical movie, because that's what it's evolved to. And I can't wait for the people in the industry to see what we've already got in the can, because it's freaking amazing.
Game of Loans is out. You can take your 8-hour CE right now.
Oh my goodness.
And watch Game of Loans, because it's epic. It's the best we've ever done, and Ryan plays the king, and you did such a good job.
Your team is did an amazing job in editing. The script was thick this year. Like, we actually had a script to follow. We went off of Game of Thrones and made Game of Loans, and I had to wear a crown and a big fur cape. It's pretty cool, actually. So
it's amazing.
If we can get a highlight reel, let's point to it. And more importantly, go take Ken's class, because we're all stuck and you need your CE, and then you can watch Game of Loans and get your continued education all in one day.
Yep, do it.
There we go. Best way to end. Thanks, man. Love you.
Thank you.
See you, man.